Hello, everyone. Okay. Hello, everyone. Welcome to the last session for today's UNS Fintech Summer Course 2020, hosted by Center for Fintech and Banking Universitas 11 Maret in collaboration with International Office Universitas 11 Maret. So I'm Gilang Bogi. I'll be the moderator for this session. And before we begin, I would like to remind you all about the class rules. So please turn your video on during the session and change your name into the format student ID underscores your name. The student ID can be found in the file that we've shared before. And the session, if you have any question, we will share a link via Slido. The committee will help you to send the link on the chat box. And don't forget to fill in the attendance list at the end of the session when I request it to fill it. And for further information, you can refer to UNS Fintech Summer Course booklet that we have shared before. So in this session, we will learn about Fintech Startup and venture capital. As we know that the fast growing of Fintech business has gained great interest from investors. Fintech itself can be applied in many sectors that give many positive impact. Moreover, venture capitals provide an opportunity to invest in startup companies and has become the biggest funding source for a fintech startup. And joining with us now as our instructor, Mr. Markus Liman Raharja. Halo, Pak Markus. Pak Markus, can you hear?
Bob masih di mute.
Oh, wait.
Halo, selamat siang, selamat sore.
Halo, Pak Markus. How are you?
I'm good. How are you?
Fine. Thank you. So, Pak Markus is a VP of Investor Relation and Strategy at BRI Ventures. And before joining BRI, Pak Markus was involved in the Southeast Asia startup ecosystem through various roles. His 7+ years of experience in digital industry give him a deep understanding of corporate startup synergy, as well as a large network to multiply corporation. And Pak Markus, you will be given 45 minutes till an hour to deliver your presentation, and then we will continue to Q&A session. So without further ado, Pak Markus, time is yours.
Thank you, Pak Bogi. I think selamat sore, salam sejahtera buat kita semua. I'm very happy to join the sessions today. But first of all, I would like to say sorry. The session was delayed quite a bit. I think not a bit, 20 minutes delay. I'm really sorry because I'm jumping off one to another meetings, and hopefully bisa membawakan materi dengan baik. Mungkin sebelum ini saya mau konfirmasi, Pak, ini pakai bahasa Inggris, bahasa Indonesia, Pak?
Using English, Pak.
Oh, okay, yeah. Because if I need to use my English, I don't have a problem, but sometimes my listeners do have a problem. So later on, if my English is starting to blackpotan, I'm terribly sorry, but hopefully I can deliver all the sessions well. So let us start the sessions today by doing an introduction of myself. I know Pak Bogi have mentioned about my name and what my role is, but I would like to do another intro. So it will be good to know my background a bit more, to give the same context for all of us. So can they share? Ya. Gue bisa sharing screen soalnya. Oke, next. Ya, karena ada pepatah, tak kenal maka tak sayang ya, saya nggak tahu bahasa Inggris ya. So this is my resume. My name is Marcus and I'm the current VP of Investor Relations and Strategy in BRI. So I have now more than 7 years, I think up to 9 years experience in digital industry. Previously, before I take the role as the head of digital strategy in the bank and then moved to the venture team, I was a startup founder myself. So today's session was very interesting because I will give you a point of view from a startup founder as well as a venture capital. During my startup program, I got several investors coming from Indonesia, also from Singapore. So I spent a bit of my time in Singapore. So I spent around 1 year there, growing up my startups. Fast forward, the reasons why I closed down my startups and then decided not to continue my startup journey is because I think during that time my startup is not scalable, and at the end of the day I'm just doing things that are over and over and over again without some scalability. So with a very hard decisions that I need to make at that time, I closed down my startups. But I think when you close one door, there's another door's opportunities open. So I joined BRI in 2017 as the head of digital strategy, and uniquely all the lessons and all the learnings that I got from that time was actually very useful for my corporate time. So I grow BRI digital team starting from just 2 people up to 160 people. And recently I moved to the venture team. Expertise, hopefully I would love to know you also, but since it is quite impossible, so let's do a polling because I would like to know the audience as well. Next. So if you have your phone with you, or if you have your laptops with you, anything, please scan the QR. I'm gonna do a little bit of polling. I think the reasons is I would like to know more of your background. So when I deliver my sharings today, it will be more catered to which kind of category. So if you go and polling, let's see the results. Ya. Jadi polling yang pertama, please choose a profile that match with you. Are you currently in uni studying, or are you a fresh graduates looking for jobs, or are you a professional workers already working? So I would like to know. 44 people already answered. Yep. Okay. So mostly college, university students. Okay. Got it. Got it. Shall we go to the next one? Yep. Let's go to the next polling. Polling number 2. Yes, please type a startup name that is familiar with you in Indonesia. I would like to know how many startups can you spot or that you use on everyday basis. We see Gojek, we see Grab, we see Tokopedia, we see Modal Rakyat, we see Ruang Guru, mostly Gojek. Okay, we see lots of people using Gojek. There's Gojek with dash and no dash over there. But yep, I can tell Gojek is the biggest. All right. Okay. More people's coming in. When it reach 80, then I'll stop the polling. Yeah. We'll move to the third one. Okay, it's good. Most people know quite a bit. Kita bisa BRI API is not startup, but thank you for pleasing me. Because that's the product that I create when I was in BRI. Okay, not bad, not bad. Let's move to the last polling. So, yep, the third polling will be yes. I think this is the questions I would like to know also from this audience. Do you want to be a startup founder in the future or not? Yes, no, maybe. Okay, let's see. Have you decided? Wow. So many people are trying to be a startup founders. Interesting. Interesting. If the time allow us, Pak Bogi, maybe at the end, I would like to hear those that are trying to, those that want to be a startup founder. I would like to know the reasons, yeah, at the end. Okay.
Yeah, sure.
All good. Thank you. Thank you. This gives me some sort of clarity of a group that I'm talking with. So let's go to the learning objectives. I'll try to keep it under 45 minutes because in the materials it shows that around 140 minutes, so it's quite long. But I think I'll skip some of the parts. I think I would like to discuss more at the end. So the learning objectives today are three things, right? Number one is I would like to all of us have the same context of what is a startup, what are the characteristics, why startups important, and how do we see the development of startups. Yep, I think that's point number one that I would like to discuss with you today. Number two, the learning objectives is I would like to also give a point of view. What is the difference when you becoming a startup founder and when you becoming an investor, right? There's a different point of view that later I would like to also discuss. And last but not least, I would like to also go to the things that are very applicable. I think this is a great tips that we try to summarize during my time as a startup and as a VCs, is how you can create a short, concise startup pitch deck that can get people interest. Right? Things that I would like to mention today. Let's start. Next, so I would like to start with the questions, and this is the questions that probably most of us keep wondering, right? And most of us probably having a hard time to spot the difference. So, what is the difference between a startup and a traditional MSME, right? Is there any difference between startup and traditional MSME? Or in simple terms, ada nggak sih perbedaannya startup yang bikin makanan like kopi kenangan today, and also nasi padang? And what are the main difference? Next, if we take a look, and let's move back to 2006. Yang when we call nasi padang is all the same. From 2006, nasi padang is rice with green chicken, with rendang, with perkedel, with sayur singkong, and a little bit of coconut curry, right? 2013, nasi padang will still be the same. Even 2020 now, nasi padang is still the same. And I really believe 4 years from now, nasi padang will still be the same, right? But when we talk about startup is always changing. In 2006, if we want to go and deliver foods online, probably the only way is for us to call the restaurants, or we go by our food, by ourselves, by our motorbikes, by our cars, to the nearest restaurants and grab something over there, right? 2013, we know there are a couple of new startups is actually doing this kind of things. The likes of Food Panda, the likes of Click It. But sadly, we didn't find the startup anymore because they already closed down. 2020, if you want to order food like this, we now go to Gojek, or we now go to Grab, right? So what is the difference? And what is the difference of startups? Next. Startup is an organization formed to search for a repeatable and scalable business model. So this is the main difference. What is the difference between startup and the rest of the traditional MSME? Is startup is always looking for a repeatable and scalable business model. What does it mean? It means that startup have a flexibility to pivot, to change their model in order to fit with their audience, right? For example, I use Tokopedia a lot, right? And I've been using Tokopedia since 2014-15. Back in the days, when we take a look at Tokopedia and we want to pick and buy and purchase goods, when we go to the logistics side, at the time we pick the logistic vendor first, right? Whether it is Tiki, whether it is JNA, whether it is anything. But nowadays it has been changing, right? We don't pick the vendor first, but we pick how do you want your goods to be delivered. You want to deliver it now, tomorrow, now, 3 more days, 5 more days, so on and so forth. Because what? As a customers, we don't care who deliver the products as long as the products is actually coming to our home. So this they change the business model. They change the way they interact with their customers. So this is startup. Next. And as you mentioned, right, in a polling, our life now is changing because of this many things, right? And I think I don't have to explain more on the slides, but you can see the way we purchase money, the way we purchase air tickets, the way we even do our work is actually changing because of them. And this change of customer behavior is the thing that I want all of you to have the same context, right? Because this startup is actually changing the way we live today. Next. So as a point of view, right? Founder and investors is a two different jobs, a two different criteria, a two different perspectives. As a founder, right, usually, and most of the time, I call it a windshield view, right? Meaning that you have a deep understanding of a specific vertical, but sometimes have a low coverage range to other verticals. Because of what? You need to really understand your market, create a specific products, go to a specific niche market to cater your customers. But as an investors like myself, I don't need a windshield view, but what I need is a helicopter view where I can tell and have a medium or high understanding of a specific verticals because I need to assess not just a startup, but I need to assess the industry. So this is the different point of view as a founder and as an investors. Next. So what is the type of startups, right? Startups is a lot. I mean, in bahasa startup can also be mentioned as UMKM because if we take a look at definition of UMKM di Undang-Undang PT is those that have a revenue below 48 billion, right? So what is the stage of startup, right? When you have an idea, you find a co-founder. That is a bootstrapping phase where you're trying to validate, you're trying to make your idea into some executable things or platform or products, right? And then probably what you do is you go and to talk to your mom, to your dad, to your uncle, to your auntie, to your grandpa, I don't know, to get them buy-ins, right? So that's why there's usually a family and friends around where you sell this product to them or where you ask money from them to um, to help your startup's growth, right? And then there's an external validation line where at certain point in time, you need to raise money from an early stage investor. So you go to an angels, you go to a VCs that are doing more like accelerator, incubator, or a seed round, and then you grow your company into a growth stage, and finally you make it to an IPO. So this is a streamline, so many alternatives, but this is the startup stages that I can tell you guys with. Next. So what is a startup capital structures, right? Not many people know that actually startup can raise two things, right? You can raise equity and you can raise debt. Usually, startup itself is raising equity. Why? Because equity, there's no obligation to pay, right? When people invest in you, they believe in your product, they believe in you, they believe in your startups, right? So it is not like a debt. But on the way it goes to a certain process, probably that will also be relevant to you. And if we take a look at the capital structures of seniority, debt is a more senior. What does it mean? Later on, if your company is exit or liquidate, or even go to an event of default, the one that get the money back first is the one that have a senior capital. So debt is more senior than equity, right? So that's why people use and raise equity first at the start, and they will raise debt later on when the company is already big and they're trying to have more capital to grow their business without representing much equity because raising debt is more expensive. Right? This is more technicals, but hopefully you guys can still follow. Next. Back. And this is the another illustrative on how you can actually raise your company, right? As your startups. Usually, when it is an idea, this is the startup is 100% yours. When you have a co-founder, probably the valuation is actually going up, but you share your shares with your co-founder. And then when it goes to a family and friends round, when you raise money from them, the company's value is actually going up, but your share is actually going less up to IPO stages, right? And what's the illustrative that I would like to tell here? Do you want to have a 100% idea with a company valuation at $10, or would you prefer to get a 17.6% of your shares, but it is actually worth $10 million? So that's why people's raising money, the people's growing their startup is to get more business even though they have a less share. So this is the first part to give you a perspective and understanding of startup and give you a bit of a point of view. Next. So why startups interesting? I think I need to explain a bit on the landscape itself here in Indonesia. Next. Did you know that 8 out of 16 biggest cities in Southeast Asia is actually located here in Indonesia? And this is something that probably most of us didn't aware. But if you take and think at this point of view and perspective, meaning that Southeast Asia market, 50% is Indonesia. So that's why lots of opportunity is here in Indonesia. Next. And if we take a look at the tech opportunities overall in Southeast Asia, it is a market of 570 million people with high internet usage. But you can see that 264 million is actually in Indonesia. Next. So many startups is actually racing over here. But if we take a look, ride-hailing and e-commerce is paving the way, right? So they are, I think, the most mature, like the Gojek, Grab, Tokopedia, Bukalapak, Shopee, Lazada. Those categories are more leading than the rest. I think the rest will also follow. Next. Previously. Next. I think we skip one slide. Next. Next. Sebelumnya. Yeah. And if you take a look at the investment size to date, there's a 7.7 billion is actually invested in 2019. The numbers will be significantly reduced in 2020 because of COVID. But if we take a look at over here, the trend is keep raising. 2018 is an anomaly year because at that time, there's a mega deals. So Tokopedia, Gojek, Grab is raising deals during that time. So the numbers is skyrocketing, but 2019, 2020, it will normalize. Next. So where VCs are actually investing? So this is the key growth sector based on the capital invested. Multi-verticals main is a super app. So they do a diverse ecosystem like Grab and Gojek. I think they're leading the way. Retail is actually following. But if you can see over here, logistic, healthcare, education is starting to get blue, right? Blue meaning that it's more capital invested in. If you take a look over here, the next emerging ecosystem is actually starting to also pumping in, right? We see now because of COVID, telehealth is rising, education is also rising like this. We cannot do offline, online education is also rising, so on and so forth. Next. This is the opportunity. And one key facts over here that many people didn't know is that Indonesia is the fastest digital growth on earth. Our digital growth is really, really fast, even faster than our peers in Southeast Asia. And what's interesting is people that own a bank account is less than people that owns a smartphone, right? If you think this fact, meaning that there are more opportunities to be used by online to get into some sort of financial inclusion and also to push the financial literacy. So I think that's why UNS also have this Fintech Center, right? Because we see the same opportunity in the markets today. Next. Zooming in, Indonesia is a hotbed for startup activity. To date, we have 5 unicorns now: Gojek, Traveloka, Bukalapak, Tokopedia, and OVO. We're the 5th largest startup ecosystem in the world. And the amount of investment coming in is really, really huge. Next. Zooming in again, right? In the digital tech opportunities, if you take a look over here, from the money that actually invested in, 4 sectors that are leading the way as an overall digital economy: e-commerce, travel, online media, ride-hailing, right? And with the markets given today, the growth from the eastern side of Indonesia will be more because this is the market that still needs to be cracked. Logistic-wise, infrastructure-wise, is still far behind from Java, and Sumatra. So we will see more on the eastern part in the next 5 to 10 years. Next. Some of the trends that I would like to share with you. Number one, e-commerce will be a very huge industry. Already mentioned. Next. E-money transactions is also soaring off the roof. I think lots of you must be using the likes of GoPay, Dana, Link Aja, OVO, right? Especially because of this pandemic, the online transaction is keep increasing. So people are now using less cash. Next. This is what interesting, right? The rise of the new fintech and the illegals close down. So many illegal fintech is actually closing down. I think this is really bad for the industry. OJK is asserting really hard peraturan kepada mereka gitu ya. So many illegals are now closing down, which is good for the industry. But overall, the legal fintech is keep raising. So we have now 3 POJK for fintech, 77 for P2P, 13 for innovation, financial innovation, and 37 for crowdfunding. And I really believe more will be coming. Next. Not just the market itself, but the regulators is now more open for innovations. Central bank, if you want to do startups in payment, in e-money wallets, payment gateways, switching companies, you go to BI. They do have license there. OJK is also progressing really well. Peer-to-peer crowdfunding, digital banking, insurtech, and also Kominfo. Why Kominfo is here? Because one of the important element factors is digital signatures and also eKYC. So that's why Kominfo is to create a more robust regulatory. And to date, we have seen 161 fintech got license under OJK. Next. And this is a very interesting trend, right? A super app is becoming the new normal. The unicorns are now also doing an M&A. They acquire another company and they grow. Gojek, Tokopedia, last year they acquired Bright Story, one of the big acquisitions over here. Gojek have been acquiring companies since 2 to 3 years ago. Mitrans, Kartuku, Mapan, Loket is the one that they acquired. Even Grab is also doing some acquisitions. Why? Because these unicorn companies are now aggressively acquiring smaller startups to complement their services. And this is a trend that we see. And even Uber in USA are now doing the same strategy. Very interesting. Meaning that in super app scheme, especially Gojek, Tokopedia, Grab, we're actually leading the way here based on the market itself. Next. As mentioned, to summarize, Indonesia is leading startup investment. Last year, 60% of the funding that are going in is actually invested in Indonesia. And if we take a look, I try to summarize the potential winners in Southeast Asia. How far are we behind from other companies? In online games, we are 4 years behind from USA. Ride sharing, we are actually ahead of them now. Uber launching Uber Food, Uber Eats, following the strategy from Gojek and Grab. Online travel will still far behind. It's supposed to be Traveloka over here. Sorry for a typo. Inventory-based e-commerce, Amazon, we're still behind. E-commerce is still a long way to go. So many things to be done. Fintech, I think we're about 5 to 10 years. What's the point of saying this? What I would like to tell you guys is the market is real. The opportunity is real. So this is the things that why it excites me and why I love to be in this industry. Next. In addition, not just that, but the quality of the founders is also getting better and better. Why? Because now people that are doing startup is not just people like me who just finished university and then create my own startup, but more companies or more people that have an experience in Facebook, Gojek, Google, their VP, their C-levels are now creating startup. So this is good for the whole ecosystem, meaning that not just the community itself, but the talent itself is getting better. So I'm really excited for the next 5 to 10 years to see how the industry will become in the future. Next. But we also know in 2020. Um, I mean, times fly really, really fast. It's already 5 months we're in COVID, right? And if we decoding the economics of COVID, some will win, some will lose, right? It's market. We cannot beat the market. But the one, the winners, I think it will be very interesting because COVID, many people's mention, I think you already heard, is the guru of digital transformation, right? Because of COVID now, we must do things online. Because of COVID now, I need to do meetings online. Because of COVID now, I need to do purchase things online. It changed again the behavior if you follow me from the start. And this is something good for the industry. I'm not saying COVID is good, but on certain industry, it is actually accelerated. Education, for instance, accelerated really fast. Healthcare, the purchase of goods of like essential products like Tani Hub, Sayur Box, if you follow the news, is also racing really, really fast. Even fintech. Now, people do more digital banking rather than offline banking. Next, but what can we learn from COVID and all of these things? Market strength is recovering, but market behavior will never be the same. Right? So I want to create some sort of line from my first explanations up to now. We need to check at the market behavior. If you want to be a good startup founder, you need to understand the market behavior. You need to understand your customers. You need to understand how you want to tackle them. And by understanding the behavior, right, then we can provide a good startups. Market strength will be recovered, I really believe. Economics will be cautiously reopening. Some sectors require a shorter time, but most will take a longer time, like arts, entertainment, accommodations. This education mean the offline educations, and to get to achieve a pre-COVID numbers and growth will be harder. But we can tell that the new sectors will be raising. I think this is a really good um, summarize of what is our markets today. Next. Okay, so I'll stop for a while. I want to take my drinks. If you have questions and discussions, you can go again to slide you. I will see your questions there, and hopefully, if we have and the time allow, I'll answer some of the questions also. Okay, next. The learning objective is quite a lot and quite heavy. I've been throwing in lots of informations to you. Hopefully, you're still excited to follow the third part, like on how VC works. I think this is the segment that have been given to me to give you a quick understanding on how VC works, and later on, I'll finish it off with the tips on creating the deck. So let's continue. What is a venture capital? If you take a look at the definition of venture, venture is a risky or daring journey or undertaking. So venture meaning that you dare to do something dangerous. A venture capital is a risky job. I often make a joke with my colleague over here. 10 years ago, VC is not a job. And probably in the next 10 years, if we don't do well, VC will also not be a job anymore, will no longer exist. Why? Because venture, what do? Is we invest in a new business model. A venture capital must be someone that have a 3 criteria. Number 1, someone that have a high curiosity. Number 2, someone that have a conviction. Number 3, someone that is creative. Why? Because what we're trying to do is learning based on historical data, based on market trends, and we predict, and with our convictions, we invest in something that can give a better future, a sustainable future. And that is the job of a venture capital. And why venture is used? It is because it is a risk-taking journey. In venture capital, it is a high risk, high reward. We invest in something that probably doesn't exist yet as a market. Can you imagine you're an early angels or early investors of Tokopedia at that time? You must be crazy, right? You must be crazy to invest in Gojek, in Traveloka. You must be crazy to invest in things like this that still have a negative value, right? So what do we invest in? We invest in a sustainable future. So that is why it is called the venture capital, because it is a risk-bearing journey undertaking. Next. So what do we do as a venture capital? So in short, we raise pool of money from investors. At my case, BRI Venture Investor is the holding, the bank. We finance and invest in the new rapidly growing companies, startup. Remember from the first section, startup is an organization that always look for a repeatable and scalable business model. So this is the thing that we like to invest. And what is the characteristic, right? We invest in them, we buy their equities. As an investor, we add value through active participations, giving advice, opening up some new ways. We take the risk, we see the horizon, and then we make money by selling them in the future as part of the capital gain. Next. And this is how we make money. VC make money two ways, right? People think that VC is not raising. No, man. Me, myself, I'm also raising money. I raise money from BRI. I raise money now from a third party also. So we have a new fund coming up, some called Sembrani Nusantara. So if you take a look at my web here, Sembrani Nusantara is my new fund. You can Google it to know what is Sembrani. But how do we make money? We make money from two ways, right? Number one, we make money from management fee. So usually when people give us money, we take 2% for our operational expenditure. So the general expense will be taken care by the management fee. And the big money is not from the management fee. The big money is coming from what it called carry. Typically, 20% of the capital gain will be given back to the investors. In this case, to BRI Ventures. So it's like dagang, Bapak Ibu. So we from the companies that is out there, dari barang-barang yang ada, we pick one that we like, we make it better, we make it more appealing, and then we sell it at a higher price. So that's the job of the VC in short. Next. And how the VC money flow, and to give you more understanding, investors can be pension funds, banks, corporation, insurance company, or others, is called limited partners, right? On your left. Investors then invest money in a venture capital company, and the company is the fund manager. They manage the money. Myself. I'm the venture capital company. I manage their money. And then as a fund management, we get an annual fee, we get a carried interest, right, as the fund, and then we invest in a portfolio company. This portfolio company is the startups that I mentioned in the previous section. During the process, when the startup is already good for exit to liquidate, we then go for an IPO or private purchase of the VC company to a buyer, and then the buyer will return back the money to the venture capital. So we get money, and then we will split the money back to the investors. So this is the understanding of how the VC money flow. Next. And what is the process in the venture capital? There are two big parts of our process. Number one is we source a deal, we initiate the deal screening, we shortlist, we do feasibility study, and then we invest based on investment thesis that we believe. We give them term sheet meaning that we give them like a contract of list of the things that we would like to be invested in, and then we invest them. Once we invest the company, next, we will monitor their portfolio. So once we done the investment, my next job is to do a portfolio monitoring. So how do we monitor portfolio? We do a quarterly report, we do a monthly report, we go to their board meetings, we give their advice, we talk to them, and after a certain period of time, when, as I mentioned, the company is okay and good for exit, we do a potential exit assessment. IPO, acquisitions, share purchase, buyback by the founders, so on and so forth. There's many ways. We don't have time to explain about that, but I would like to mention more on how we do business. So we do investment and we monitor our portfolio. Next. So this is the illustration of VC, right? We never invest in one company. We always invest in a basket. And as you know, investing in startup is high risk. At the right, probably 3 of our investment is going bust. But some will making money. And usually only 1 or even 2 companies that make a good return. But this return is huge enough to actually cover the whole investment. So this is how VC works. That's why I call VC as a risk and daring journey. Because this is not for the faint-hearted. Those that have a faint-hearted, gampang sakit jantung, cannot work in VCs. Because you'll be shocked on how bad startup is, right? And, and, and usually, the return of the venture capital is way, way, way higher than an average return from a high SK. We are aiming to get 12 to 50% internal rate of return. And we spread the risk. It is a high risk, high reward game. These are illustrations of how I also doing my portfolio constructions. Next. So how do we do valuations? This is the question that everybody asks, even the startup itself. So I'll give you a very simple tips and how I think and I value a company. A valuation is a business process to determine the current worth of the business using definitely an objective measure and evaluating all aspects of the business. Valuation consists of 2 things. Next. Valuation consists of story and financials. This is the things that not many people understand. This is the lectures by Damodaran. Damodaran, if you know, is one of the leading investors in valuation in NYU, New York University. And he breaks down valuation into 2 things. To have a good valuation, you must have a good story and a good financials. Financial-wise, you may be break even, you may have a good company, but if you don't infuse with a good story, or if in bahasa, kalau financialsnya kalian tuh nggak ada roh, kalian tidak memberikan roh kepada financialsnya, then financial is just a number. But if you have a good story, but not have a good financial, meaning that you guys are selling dreams, and we don't like people selling dreams. A good valuation must be a combination of both, a good story and a good financial. I'll give you an example. Next. So this is the concept of how I value a company and probably also a tips on how you can actually pitch me later on. Imagine your startup is a box. I take Airbnb for example. When you craft the story, the more things that you put in the box, the value will increase. If you put junk in your box, then it will be junk, garbage in, garbage out. But if you put diamonds in the box, if you put gold in the box, if you put some valuable things in the box, the value will increase. If you add patent, if you add a kick-ass management team, if you add more story and you craft it in a good way, then you can have a good value. And finally, you will put a label to present it to your investors, right? Again, an illustrative. Give me $1 million to build this box, and you get X% by investing in it. And this X% will depend on the pre-money valuations. And how do we determine valuations? Again, next. Is by having multiple approach. We can go by asset approach, meaning that we calculate their asset, replacement method, liquidation method, we see and we compare with other companies, or we can go by market approach or by income approach. Asset approach might be not ideal for startup because this is commonly used for a liquidated business. Business that have lots of asset like property might be ideal for asset approach. Income approach usually for an established business like Bank BRI, discounted cash flow model is an ideal to know the company valuation. But what about startup? Things that you don't know, is it already exists or not? Keep in mind, valuation are nothing but formulas, scientific guesstimate. So I need to guess, you need to guess, we find value in the middle. It's just 2 things, right? How bad market is willing to invest in your little red box, or how bad are you willing to step in? And we commonly use a market approach. How do we do market approach? Is we do a comparables with other companies or precedent transaction method. We see at your GMV, and we take an example from that. And this is very common to be used in an early stage company. Next. So when you negotiate with your investors, we always look at two things, right? The pre-money valuation and how much are you raising. Pre-money, okay, taking example of the box, is the price of the box that you are willing to sell, right? So take an example, I'm willing to sell $4, the box that I'm willing to sell. And to grow this box even further, I need another dollar. That is the invested amount. So the post-money valuation is the pre-money plus the amount invested becoming the post-money, is the value of the box plus the funding received. So with $1 of investment, me as an investor will own 20% of the company. Get it? So this is how we think, and I mean, the equations, the variables is a lot, but I'll try to simplify things in order for us to get the same understanding. So this is how we see and value a company. Next. And usually, as an investors, we don't go in alone. Again, because it is a risky and daring journey, usually we invest in as a syndicate. So in a one round of investment, there's usually a multiple investors. I can take the lead meaning that I will be the one that define the terms, and then I will find my friends who are also interested to invest in the box. So usually the lead investor will take more than 50% of the invested amount, then I will share it to investor 2, investor 3. And investment term will be defining the investment type, the financing type, the control, the downside protections, upside protection, so on and so forth. I will not go into too much technicals, but if you're very interested, please take a look at the explanation of liquidation preference, tag along, preemptions rights, so on and so forth. It's too technical, so I don't want to spend time over there. And the $1 investment amount is the terms that you agree I will invest you in. So this is how VC works in a very simple term, by using a box, amount invested, and the ownership that I own. So that's why venture, again, is a risky and daring journey. And venture capital is not for those that have a faint heart. You'll not fit for the industry. Next. So this is the last part. I'll give you some tips if you want to talk to me or to any other investors and how to create a good startup pitch deck. Next. First of all, why we prepare a pitch deck? Many people are having a misconceptions. They thought that by making a pitch deck, it will allow me to invest in you. That is completely wrong. Okay, I mentioned again. You create a pitch deck is not for you to get investment, but a pitch deck is for you to secure a face-to-face meeting. Why? On a weekly or monthly basis, I get over 300 startup pitch deck in a month. Can you imagine? And I don't have time to actually pick one by one. Having a good pitch deck would help me to pick a good and compelling startups. So then what you will do is you can follow up accordingly. My team, my analysts, will screen 100 plus pitch deck on monthly basis and probably will meet at most 30 companies. So having a good pitch deck is the key to secure their time. Okay. So here's the catch, yeah. If you go and ask advice, you'll get money. And if you go for money, you'll get advice. You will learn and understand it when you go and really doing your startups. Next. And how to create a good pitch deck. Some of the guidelines. Number one, so many variations, but usually keep it short, keep it clean, no clutter, meaning that don't put too much work. Who want to read your pitch deck? And it should be simple and self-explainable with a super simple image and diagrams. The trick is, if your grandma can understand your deck, then it is a good deck. If your grandma cannot understand what you're trying to sell, then most likely your investors will not. You need to make it as very simple and leave the buzzword. I really hate people pitching me with with the buzzword artificial intelligence, supply chain, blockchain. For me, that is all bad things, meaning that you don't understand. If you try to throw some buzzword, for me, that you don't understand the business. The business should be very simple and need to be explainable even to your grandma. Next, I quickly close my lecture today by giving you this very quick outline and guidelines. What is the key components in a good pitch deck? Number one, it must have a cover slide. Number two, it must have a purpose. Number three, it must stating the problem. Number four, it must stating also the solutions. Number five, you must stating why now. Six, market size. Seven, competitive landscape. Eight, the product itself. Number nine, the business model. Number 10, the team. And 11 is the financials. Next, I'll give you an example. What is a good cover slide? A good cover slide always contain a brief one-liner explaining about the company. If you have a website or an apps, website and apps, and it should be a one-sentence elevator pitch so people can understand your company. Because the cover slide is the most important. If your cover slide is not interesting at all, sorry to say, I will not read it. If your cover slide is good, probably I'll take a look. Next, company purpose should be clear. You define in a short declarative sentence. It must include your vision. It must include the solution that you're trying to solve. Next, problem must be clearly showing the pain and show that the market evolve and you understand the problem. The more personalized the problem, the better you will understand and when you talk to your customers. Don't shoot out problems that is always been there since ages, right? You want to be able to tell a problem that is relevant to you, to your customers, and to your investors. Next, solutions. You need to be able to demonstrate the company's value propositions on how to make your customers' life better. You need to tell a story, and you need to show the core value propositions of the client itself. Better, faster, cheaper, more economical, so on and so forth. Next, why now? It set up the historical evolutions. It describes the importance. The slang words is create FOMO. It creates me fear of missing out. It creates the sense of urgency. Why this company is good? Why is it now? Because timing is everything. By having the right why now will create the right momentum for your company when you pitch to an investors. Next, market size. Always show in a TAM, SAM, and SOM, total addressable market, serviceable addressable market, and also the serviceable obtainable market. So you know that how big that you can obtain from the big markets. Next, competition is also good. Never tell your investor that there is no competition out there. You must be crazy. And I heard lots of crazy people already. By understanding the competitors, by able to lay it down accordingly, you can tell what is your competitive advantage and how you can create a barriers to entry for a new players. So this is why it is important. This slide is an important slide for us to know about your business. Next, product definitely must have to show the working product, to show what are your milestone, what are trying to do. Next, business model is always important. How do we make money? And please don't do this. Never told anyone that your business model is advertising. That is a really bad business model. Advertising is not a business model. Okay? Because a real business model does not come from advertising. A real business model must create a real money. If your startup rely on advertising, meaning that is not a scalable business worth to be invested by a venture capital. Next, team shows how deep the experience, the relevant experience, and probably failures. The batch of failures, meaning that I have failed this once. I know how to make it better. Sometimes a badge of valor is important as a startup founder. Next, last but not least, your financials. Again, no matter how good your telling story is, but if your financial is bad, you don't understand how do you do forecast, you don't understand how you translate. I've seen many, they can tell the startup in a very good story, but their financial is really bad. It will not take you anywhere. You need to be able to combine the best of both worlds, able to tell the good story and back it with a good financials. Next. So this is all. Next. Back to the learning objectives. So I've explained it to you. Hopefully, you can still follow and still be as excited as I am. I've mentioned about the startup and characteristic. I've mentioned about the point of view and also a good pitch on how, and good tips on how to create your pitch. So this is the end of my lessons today. Hopefully, all of you can get what I mentioned. I give it back to the moderator. I have seen a lot of questions already. I can take some.
Okay, thank you, Pak Marcus, for your insightful presentation. So now we know more about startup, even how venture capitals works and how risky is it. It is, and as long as your grandma understand, you have one step ahead on making pitch deck. So maybe we can continue to the Q&A session. I saw a lot of question on the Slido. Can we, Bima,
Yeah.
can you share screen the Slido? So, Pak Marcus, you want to choose the question or?
Okay, I'll choose the question, yeah?
Yeah.
How long do we have, Pak?
We still have 20 minutes, 20 to 30 minutes. Long time.
Okay. Probably I'll stop at around 3:30, yeah?
Yeah, 3:30 is okay.
Okay. So I'll answer questions starting from the most popular one. Then I'll go to the bottom. Okay, number one. In correlations with open banking, how BRI API comply with the digital banking regulation, particularly in regards of customers' data protections and bank secrecy. Okay, this is not relevant to today's talk, but I can quickly answer because I've been in BRI for long and I've also been doing an API. Open banking is a very interesting concept. I think previously, probably you also learned about open banking. Right? I saw in the course, there's an open banking course also. What is an open banking? Open banking means that banks are opening up its services to other third parties. So that's why an API is an important factor in open banking. API stands for Application Programming Interface. And how do we comply? OJK is really tough and really strict on what is the product and services that banks can actually offer to the companies. And if we take a look on the API is just a layer. Okay, API is just the channels and the methods to connect with a third party. But behind the API, the microservices, meaning each of the services still a services of the bank. There is an API for fund transfer. There's an API for EKYC. There's an API for lending. There's an API for credit cards. There's an API for so on and so forth. So that's why in BRI, we are very strict in managing both the API layers and also the microservices layer. By what? Number one, we acquire OJK license. So BRI is the first bank that acquired an OJK license for an API business. Number two, we have an ISO also, an ISO in digital banking, an ISO in API, and also an ISO in big data. Why it is important? Because we need to protect the customer data. Here in Indonesia is different than the markets in the Europe markets. In Europe markets, we know there's a GDPR, where the data is owned by the customers, but over here, the data is owned by the bank on behalf of the customers. One of the protections that we do is everything must be stored local. We cannot use a cloud provided by other parties. We must be using a local server that is owned by the bank or with its partner, meaning that the data is safe within the bank. And we even have a multi-layers of uh, constructions also. Not all people can actually get an access to the data. And this is how we protect customers' data. And this data sharing, this data secrecy is really, really important. Yeah? I can talk for a longer time, but in the interest of time, I'll answer questions that are more relevant. Okay, next question. Hello, I want to ask about your experience. I'm curious, why do you want to stop your career as a founder before? How actually you can move on easily? I don't move on easily, whoever it is, anonymous. It's tough. And the decisions that I made, it took me 1.5 years before I decided to close down my startup. And that is that long before I finally decided. So the galau-galaunya, the bimbang-bimbangnya is already happened for 1.5 years. And why I stopped my career as a founder, okay, first of all, my startup is doing an agency model. So we do an HR, we connect peoples to corporates, and we supply a human capital, an MT, so on and so forth. And I get really, really good clients at the time. I can mention some of it. BCA is my client back then, Maybank is my clients back then. But why I stopped my career as a startup is because it is not scalable. I realized that my startup is more like an agency model than a scalable model that I think of. There is no right and wrong, yeah. I'm not saying that an agency model is bad, but me as a founder, I don't see a scalability in it. I get a good pay, I get a good money, I get a good business, but I don't see the scalability of the startup. So that's why I stopped my startup career. But luckily, I think I'm very lucky through our recommendations and network. So that's why you need to have a good network. Go out, talk to people. And during my search for my next one, I get recommendations to go to BRI. And the decisions to go to BRI is also not fast. It took me 6 months of interview. You can imagine? I took 6 months of interview back and forth, back and forth, back and forth until I said, okay, I want to go to BRI and I want to start my career as a digital banker and as a venture capital. Okay, next one. Hello, my name is Son from Nigeria. As a startup founder, which is more important, growth or profitability? For me, the most important is profitability. You can have growth, a big growth, but at the end of the day, if your company is suffer, you will suffer and you don't make money. You can have a good paper return as a valuation is going high, but probably you don't be able to cash it out as good as the paper. So what is more important? To answer this, I choose profitability, but I give you the third options, is to have a sustainable growth. Because of COVID, it's no longer growth at all costs. With COVID, it is how you can create a sustainable growth, create a good value for the emerging ecosystem, and a clear path to profitability. I really believe as long as the company is profitable, there will be a time of exit. But if your company is not yet have a good path to profitability, then it will be really hard for you to maintain the business. I think that is more important, how to get a sustainable growth. Next. Wow, that's quite a lot. What startup field that will get priority investment from BRI Ventures, and how the procedure to get investment from BRI Ventures? Thank you. You have been listening to my startup deck, right? So number one, how to get investment. Better than investment, probably how you can secure my time. That is the right questions, right? Create a good pitch deck, create and show a good strong tractions. How do I see startup? I use 5P framework, yeah? I tell you this, a secret from me. I see number one, P, people. Is it a good people? Is it a good founder with good experience or not? The first P is people. The second P is product. Are you solving a uniquely addressable market? Is your product is unique or not? Three, performance. You need to show a good tractions of your product. Four, potential market. How big your market is addressing. Five is potential upsides. What do I get by investing in you? Berry Ventures main fund is a big fund. We are a 250 million fund. So we usually invest in a growth stage company. Our average ticket size for Berry Ventures is between 5 to 10 million. Sometimes can go up to 20 million. So we invest in a big startup that already have a good business model, a clear path to profitability, and a clear and unique product that have high barriers to entry. Those are the companies that I like to invest in. But now, I also have my second fund. It's called Sembrani. Sembrani Nusantara is my second fund. Sembrani is taken from a local folklore, a Javanese mythology. If Silicon Valley have unicorns, kuda tanduk, we have Sembrani, kuda terbang. Itu kudanya Batara Wisnu. So that's why, as you can see, the name is Sembrani. And in Sembrani, we invest in an earlier stage. Our average ticket size is between 500 to 2 million. The sectors that we invest is fintech and fintech enablers. Those are the things that we like. For Sembrani, I like to invest in a challenger brand, a new brand that is challenging a big brand, like Kopi Kenangan. Those are companies that I like to invest, have some scalability, a clear path to profitability, like probably more challenger brand. Okay, I'll go to the next one. I want to start a fintech company like Gojek and Shopee in my country, Yemen. Good luck. How to start a fintech company? What does it require to own a fintech company? Probably I'm not the best one to answer here because fintech is hard. Why? Because fintech is very rigid. You need to understand the local regulatory compliance. You need to go to talk to the financial authority in Yemen. You need to go to talk with a central bank in Yemen to understand the regulatory. But here, if you want to start a fintech companies, you need a license. You need to start doing a business and you need to acquire a license from the central bank, for the financial authorities, so on and so forth. So I think that's the best answer. You need to go and research back in Yemen, what is the regulatory landscape in order for you to start the companies. Because different countries have a different segment. Next. Most startups here get funding mostly from the USA. Are you investing in Nigerian African startups? Not yet. My focus is in Indonesia. Most funding coming from Silicon Valley is not right anymore. We see more investors actually coming in from Japan, Korea, and China to the local markets. African is, okay, venture. Again, if I say ventures, it's too much venture for me. I don't have some visibility over there. Probably later on, if I do my own fund, if Africa is good, let me know. I would like to invest in a venture risky daring journey. In regards to open banking project nowadays, how is technical mechanism? Okay, you can go to developers.bri.co.id. I'll ask my team to share. If you want to understand more about open banking, you can go and see there. I just shared in the chat, Mas Bima. So if those that want to know more about BRI API, you can go there because I'll spend more times on the API stuff yet. I'm sorry. I'll go to the next one. Besides being a hub between investors and founders, what are other venture roles to accommodate the funding and the funding of the startups? Yes. So besides that, my job is to actually fundraise. So those that are becoming my portfolio, I will also help you to fundraise your company by creating a good story, a good business model. And because we are a corporate venture capital, we are part of BRI Group. One of my job is to actually create synergy with the bank. So we create synergy, co-creations of product. We create new innovations with the bank. We see a new ecosystem. What is the bank can actually invest in? So this is my job. So besides doing the investment and portfolio monitoring, I help startup fundraise, and I also help startup to create a synergy with my banking group. Next, how long for the VC usually get return from the startup? Usually the investment period is 3 to 4 years, starting from the 5 years. Then usually we get return. Depending on the stages also, but if I try to generalize, 5 to 10 years, usually we get return from the startup. How does a VC company guarantee protection of startup intellectual property? Okay. During a VC process, what does it mean by intellectual property? If it means your idea, come on, idea is cheap. I don't believe in idea. Everyone can have the same idea. What important is your execution. About intellectual property, if it is something that is very valuable and you have haki or intellectual property rights over here, we will have an NDA, a non-disclosure agreement. And this is also the integrity of a venture capital. I will not tell other startups about your startups, definitely. So that's why all the process is very internalized for the venture capital. So that's why we're really taking care all the process with the data secrecy, non-disclosure agreements, so on and so forth. That is how we do the process. If the pitching stage, pitching is just taking time, right? I think pitching is about how you can take my time. But after you take my time, next is how can I go into your startups? And you need to prepare the data room, you need to prepare some of the data that I ask. And here's the catch here. Sometimes the good startup, okay, let me rephrase. Sometimes as a venture capital, I also pitch. The really good startup doesn't need money, so I'm the one that needs to pitch them on why they need to take my money. That is in some of the cases. I'll take 3 more questions. Yeah, I'm really sorry because I need to have another meeting, but hopefully I can help you all. I have a question. If I work on a startup, how do I branding my startup to increase the chance of gaining investor attention? Considering, okay, to get investor attention is to get your customer attention. What you really need to focus on is not how to get money, but how to grow your business. Startups that I like is startups that are really focused on solving problems and helping their customers and needs. Investment comes naturally. We invest in the founders that really understand the business. We invest in a startup that really have a passion in getting their business growth. If your focus is to get an investor, then probably you will get advice. But if you ask people for advice, you go and solve your customer problem, then you will get money for sure. That's my advice for you. Next. I've heard some talk about the use of AI in investment. What is your opinion about how do you think it will affect the existing startup ecosystem? People trying to use AI, but I don't know. I'm not a believer in AI yet. The best AI that I see is in Gojek and Grab for food technology, right? Opening up a new business, making a heat map. I think that's the best AI use cases today. Other than that, I haven't seen a really good use cases of AI in investment. Yes, technically you can by streamlining all the process, all the data. But again, investment is arts. Investment is not only data. You will not be able to find a good company just by data. Even though, I mean, lots of research already done that, hey, if we use data here, there, back then, I think we can get a good investment, but if I'm okay. But for me, investment is a personal relationship. I want to work with founders that have a good interpersonal relationship with me. And as a founder, you also want to find investors that have a good relationship with you. Because it will be like a marriage. We will be together for 5 to 6 years before I exit. So better I need to find someone that have a good relationship with me, not relationship as a friends, but as a company. So I think that's the key for me. How do VC check accuracy of the data presented by positionally funded companies? Many ways. We do third-party review also. Sometimes I also use Big Four. We do operational due diligence, we do tech due diligence, we do so many due diligence. Usually the process will take 4 to 6 weeks. Last questions. If I work on a startup, how do I branding my startup to increase the chance of, it's already, okay, skip. Okay, the open banking part, I skip, yeah, sorry, Aldi. In condition, which is in pandemic, in your opinion, was startup that will thrive and survive at least 5 years from now? Okay. I believe in 3 categories that are actually raising now. Number 1, healthcare. I think healthcare will have a good chance. Number 2, agriculture, because I think agriculture is also playing a big part in Indonesian economy today. And number 3 is logistics, because of the numbers of e-commerce boom, so on and so forth. The adjacent logistic is actually racing. So this is the 3 things that I really like as myself. Okay, Pak Bogi, I think that's all from me. I'll give it back to you.
So thank you, Pak Marcus, for answering all the questions. Before we end this session, maybe Pak Marcus can give a last statement for all participants.
Oh, statement. I have stated so many statements. Mungkin Pak Bogi kali.
Make it short and brief.
Okay. Again, 3 things that I would like to tell all of you guys. 3 characteristic which is very important. Whether you are founders, whether you want to be a startup, or whether you be investors, or whether you want to work. Number 1, you need to have a curiosity, because those that have a curiosity will have a willingness to learn, because learning is a lifelong journey. Even myself, I still learning up until now. So curiosity is very important characteristic. Number 2, conviction. You need to have a conviction on things that you do. You need to believe on things that you do. If you don't believe on things that you do, who else will believe? And having these convictions will help you to go forward even further. And last but not least is to have that creativity, right? Curiosity, conviction, and creativity. To things not just outside the box, but things not with the box. So many people tell that think outside the box. I think that's lame. It's no longer think outside the box. Think with no box, and that is creative. Thank you. Thanks for the opportunity. Thank you all.
Thank you, Pak Marcus. And so this is the end of the session. Just remind you all the participants to fill in the attendance list that have been shared by our committee on the chat box. And don't forget that we still have one day left tomorrow. We begin at 9 a.m. So thank you and take care. See you tomorrow.